Hey guys, it's me, Angela. I'm super excited to see you guys again, and I can't wait to get started on today's topic. But while we're here, why don't we do a little introduction of my puppies? So this is Luna. She's a little Chihuahua. She's about a year old. She's my little baby. And then we got Big Milo over here. He's a 100-pound dog. He's massive. We think he's like a boxer mixed with part Great Dane. Fun fact, they actually used to hate each other. They couldn't even be in the same room. It's gotten a lot better now that they are roommates, because this is my roommate's dog. Funny story, I actually took him on a run one day, and while he was doing his business, I just kept on my run, and I looked back to check on him, and I see this 100-pound Mastiff running straight at my legs. Not so fun was when I fell and hit my head, but funny story now, but we kind of have a love-hate relationship. But anyways, let's get started. So I know last week I spoke about things sellers can do whenever they're selling their home. So I also wanted to talk about things that buyers can look for, or things that they can do whenever they are looking for a home. This applies to first-time home buyers and people that have bought homes before. So either way, you guys are gonna get something useful out of this. So to start, the one thing that I recommend is to start saving early. Down payments can range from 3.5% to 20%. It kind of doesn't seem like a lot, but for example, let's take the average price for a house in Cedar Park. It's about $620,000, $435, and 3.5% of that's going to be $21,715. So even though 3.5% is a small number, it's still a very significant amount, and not a lot of people have that in their bank account right away. And if you're doing the full 20%, that's almost $125,000, right? I definitely recommend saving up early as possible so down payment doesn't become an issue. Something else that you will be paying for most likely are your closing costs. Those usually range about $3,700 with taxes taken out. Clearly that's not a small amount either, so that's another reason to start saving early, as well as move-in expenses. Depending if you're moving from in town or out of state, it can range anywhere from about $1,250 to about $4,900, which is pretty expensive. And if you're adding all of this up, your closing costs can be anywhere from about $26,000 to about $132,000. So that's a significant amount of money, and it's good to start saving early just so you can take some stress off of having to worry about your finances. Next thing I would recommend for you to do is to actually sit down and decide how much you can afford. And a great way to do that is a debt to income ratio. There's so many websites that you can do it on online. You might be asking what that is. So basically, it's all your monthly debt payments divided by your gross monthly income. And this is one way that lenders use to measure your ability to manage the monthly payments from the money that you're going to borrow from them. So essentially, it's just like an assurance to the banks that you'll be able to pay them back. Like, you don't have so many debts that you have to worry about that you won't be able to pay them back. Next, I would also recommend exploring mortgage options. I know sometimes there can be some first-time home buyer assistance programs that you can do, and I'll get to those in just a little bit. There's 5 major loan types. There's not only 5, but there's 5 that are specifically used. And the first ones are going to be conventional loans. Conventional loans are not insured by the federal government, and they can either fall into conforming or non-conforming category. So conforming loans, that the loan amount falls within the maximum limit set by the Federal Housing Federal Agency, and then non-conforming are the ones that don't fall within those guidelines, i.e. jumbo loans. For conventional loans, if you do make a down payment of less than 20%, they're more than likely going to make you get a PMI, a private mortgage insurance. And essentially, this is just to protect the lender if you stop making the payments on your loan. So basically, it's like a backup plan for the lender. It's kind of just like how you pay insurance for your cars or your phones. It's the same thing. Next, I want to talk about jumbo loans. So basically, a jumbo loan is when the home price exceeds the federal loan limit. And this usually happens in high-cost areas like California, Chicago, New York, all those places that are extremely expensive. And fun fact, in 2021, the maximum conforming loan limit for a single-family home in these high-cost areas in the U.S. was about $548,000, and the cap was about $822,000. which is insane. But obviously with more money, they are going to require more documentation to qualify. Next, I want to talk about government insured loans. And some of these are even government assisted loans that you can get, like USDA loans, which is the United States Department of Agriculture, or VA, Veteran Affairs loans. So the main three types of these are going to be the FHA loans, Federal Housing Administration, the USDA, and the VA, like I just mentioned. So going through one by one really quickly, the FHA loans, these are home loans that help ownership possible for borrowers who don't have a large down payment saved up or just don't have pristine credit. And this is, for example, when I said 3.5, this is an example of when buyers will be able to pay 3.5% of the down payment. And then the next one is going to be the USDA loans. So basically these help moderate to low income families in rural areas. Next we have the Veteran Affairs loans, and basically this provides flexible low interest mortgages for members of the United States on active duty and for their families. They do not require a down payment or mortgage insurance, and usually the sellers will pay for the closing costs. Another common mortgage that we see is going to be the fixed rate mortgage, and this is basically when your payment stays the same throughout the whole entirety of the loan. So, and typically they come in 15 and 30-year loans. This is one that is pretty common that most people use, and it makes sense. It makes your payments the same. It makes it a lot easier to budget. Lastly, another loan that is popular is the adjustable rate mortgage loan, which is also called ARM. And these will have fluctuating interest rate depending on how the market's going. And typically for the first few years of the loan, it'll be fixed, and then it'll start changing after a certain year. And of course, to not take advantage of the borrowers, they have set caps, but depending on what you and your lender work out, it can vary. I would research some first-time home buyer assistance programs, and I just listed some above. So those would be great ones to look into. I will probably make another video talking about the loans next, so just stay on the lookout for those if you guys are interested in how to choose a loan. After deciding who you want to work with, it's great to get a pre-approval letter because it helps you shop for homes within your budget. We've all gone to look at things and we didn't realize how out of our budget they were, and we're just like, this kind of was a waste of time because I can't even do or get this. Kind of frustrating. So it's good to just come prepared and know what you can afford. Not only that, but it will demonstrate your credit worthiness to the seller about the purchase amount. Honestly, if you're going to buy a home, a lot of real estate agents will recommend getting your pre-approval letter because it's just something that's very appealing to the sellers. And not only that, but it will reduce your timelines and improve your ability to close the loan faster. Next, and a most obvious tip is to pick the right house and neighborhood and make the most of open houses. It's great to go do an open house there if you can, because then you can see the surroundings, the noise, the kind of people that live there, who you see coming by, and all that good stuff. It'll just help you be more confident in your decision. And also, if you want something more quiet, you don't want to accidentally get a house in a loud area. So it's great to go do an open house there if you can. I know because I currently lease an apartment, I'll see them online, but I will never lease an apartment without actually looking at it first, because we've all been somewhere like, oh my god, like I bet this, like I'm gonna love it and it has everything I want, and then you get there and it's kind of just like, I'm not really feeling it. So it's always good to go feel it out. Next, very self-explanatory. I don't think I need to go into this one. Stick to your budget. You need to stick with your budget. It's very important because you don't want to, in a couple of years, put all this stress on yourself. Just stick to it and know what you can afford. Look for a house you can work with and pay. Something I would recommend is paying for a home inspection. Why is a home inspection important, you might ask? Well, it provides an out. A quality home inspection can reveal a lot of critical information about the condition of the home and its systems, which is super important because you don't want to buy a home and let's say you waived the home inspection contingency and you move in and everything's wrong. It's a good idea to get a home inspection for that same reason. And not only that, but it makes the buyer aware of what costs and repairs and maintenance the home might require immediately or over time. You want to be able to make sure that you can afford the repairs for the house, because if not, it's just not worth it. But it can provide you safety. A home inspection can detect safety issues like radon, carbon monoxide, and mold, which is what homes should be tested for, especially homes built before 1978 because of the lead-based paint. The home inspection can also be used as a negotiation tool. The home inspection report presents an opportunity to ask for repairs and or request a price reduction or credit from the seller, especially if there's multiple things wrong with the house. But a home inspector can approximate the installation age of major systems in the home like plumbing, heating and cooling, critical equipment like water heaters. So that's super important because you want to make sure everything's running properly and make sure everything's functioning right. Lastly, it's great to get a home inspection because of insurance. It's great to see what issues are wrong with the house, and this is something really important to consider because some insurance companies will not insure a home if certain conditions are found. And so those are all my tips for today. I hope you guys really found them useful. I do have a free home buyer checklist. I will have a link down below where you can just submit your information and then I will email you the home buyer link. So if you're interested in that, go ahead and click the link below, fill out the information, and then be on the lookout for my email, which will have the home buyer checklist on there. I hope you guys really liked today's video. And if you're a seller looking for tips on how to sell your home, look at my last video and I'll have some tips for you on there as well. Like I said last week, if you want me to talk about any certain topics, go ahead and leave them down in the comment section below, or even just leave any general comments. I'd love to read them. Well, thank you guys so much. We'll see you next week.